In this video, we're going to be going over exactly how much dividend income I made in the month of January from a $211,000 dividend portfolio. And to analyze this, we're going to be jumping into my do-it-yourself investor toolkit and looking at my investment dashboard, my dividend dashboard, my dividend calendar, my daily dividend calendar, and like always, we're also going to see how long it will take me to achieve my long-term goal of one day living off dividends by projecting out my future portfolio. And like always, if you'd like to download any of my spreadsheets and also get access to the ticker data add-on in Google Sheets that allows you to automatically import stock financials straight into your spreadsheet, then you can head over to tickerdata.com at the link in the description. I'd also like to say thank you to Seeking Alpha for sponsoring this video, but more on that later. Let's go ahead and dive in. Now, if we go ahead and zoom into my portfolio, we can see right now my portfolio value is sitting at about $211,000, and there's been a lot of volatility in the past month. In fact, if we look at the heat map of the S&P 500, in the past month, the market's actually pretty green with the exception of a few tech stocks, and that's in the midst of a lot of news in the past month. We had the news about DeepSeek, which caused chaos in the market for a couple days, and then we had news about tariffs. But through all of that, the market still seems to be performing pretty well so far in 2025. Now, if we look at my personal portfolio right now, if we include dividends and realized gains, I'm up about 36.44% with nearly $60,000 in gains. So I'm pretty happy with the performance of my portfolio. It's important to remember that especially if you're a dividend growth investor, you're going to see a lot of share price appreciation as well, because for stocks to grow their dividend payouts, they have to grow free cash flow. And as a byproduct of that, you're going to see share price appreciation, which is exactly what's happened with my portfolio. So for example, if we look at some of the big gainers in my portfolio, we can see Broadcom has grown free cash flow tremendously over the past few years, and I'm up over 328%. Look at JP Morgan, up 153%. Caterpillar, 107%. We have Jefferies Financial, 147%. Even if we look at my two largest positions, come over here, we have Visa, I'm up about 58%. And then if we look at my largest position, Microsoft, 56.25%. This is all growth as a byproduct of growing free cash flow. And because these are stocks growing free cash flow, in turn, they're also going to grow their dividend payments over time. Now, if we keep moving forward and come over here, we can now see my allocation. I'm 90% in stocks and 10% on a cash position. Cash position is sitting at about $23,500 as of right now. But what you might notice is my total holdings is now sitting at 29. And that's because for the first time in a very long time, I actually made a new addition to my portfolio in the month of January. So let's go ahead and talk about it. If we come back over to my growth chart, we can see it right here. ASML, I'm up about 8% already, and this is a stock I've been talking about on the channel for a while now. Obviously, I'm not going to do a deep dive on them right now, but over the past year, they're down about 15%, and if you're not familiar with what they do, the company offers cutting-edge lithography systems, which are critical for manufacturing a wide range of semiconductor nodes and technologies. So they're in an industry that's set to absolutely explode. But here's what's beautiful about this. This company is a monopoly. ASML's unique value proposition lies in its monopoly on EUV lithography technology, which is crucial for producing the most advanced semiconductor chips. So if we look at earnings projections for this company over the next few years, we're talking about 20% earnings growth moving forward. That is explosive growth. So while their starting dividend yield right now is only about 1%, their ability to grow that dividend, which they have said they will do, is absolutely astronomical, making it a good candidate for my portfolio as the long-term goal is to maximize dividends so I can one day live off dividend income. I found the best way to do this is through dividend growth. Over the long term, dividend growth provides more dividend income, and this is something a lot of beginners have a hard time understanding. So for example, let's say we don't reinvest dividends. Obviously, stocks that have high starting dividend yields are going to start out paying more in dividends, but because dividend growth stocks increase their dividend payouts over time, eventually they'll start paying you more in dividends than if you bought a high yield stock that doesn't grow its dividend. Now, this is an example if we don't reinvest dividends. What if we do reinvest dividends? Well, the same is actually true, it just takes a little bit longer for that to be true. In this scenario, we can see high yield for quite some time pays out more in dividends, but over the long term, dividend growth stocks continue to pay out more in dividends. That's an important concept to understand. Now, if we keep moving forward, let's look at the allocation for my portfolio. Right now, SCHD is still by far the largest holding in my portfolio. It's a diversified dividend growth ETF with a nice starting dividend yield, phenomenal history of dividend growth, and share price appreciation. It falls in line with my goals very well. But then if we come over here, we can see Microsoft. Now, for a long time, Microsoft was the largest individual stock position in my portfolio at 6.5%. But because Microsoft sold off a little bit in the last month and Visa jumped up, Visa is now actually the largest position in my portfolio. We can see Visa makes up about 6.7% of my portfolio and Microsoft at 6.5%. And other than that, it is fairly well diversified, and I plan on actually trimming a few smaller positions in the coming months. Now, if we scroll down, we can also see my stock allocation by industry. Again, SCHD is going to be the ETF here, but other than that, we have financial services, about 12.6%, technology, 14.4%, real estate, 6.7%, and consumer cyclical at about 8.2%. So overall, based off everything we've looked at, I'm pretty happy with the past month. But let's go ahead and get to what everybody wants to see, and that's how much dividend income I made in the month of January. So if we jump over to my dividend dashboard, let's go ahead and dig in. If we go ahead and zoom in down here, we can see my historical monthly dividend income chart. It's grown tremendously over the years, and in the month of January, we had one of the lower months, but it came in at $271.14. Now, to some people, that might seem like a lot of money for dividend income in 1 month, and to some people, it might not seem like very much. It really depends on your perspective. But a couple things that are really important to keep in mind. First off, we can see January is not typically one of my high months anyway. In my high months, I'm generating over $1,000 in dividend income when SCHD makes their quarterly dividend payment. But again, we also have to go back to the case study that I just showed you. We're not investing to maximize dividend income right this very moment. We're investing in quality companies to maximize dividend income over the long term. It's such an important concept to understand. And like I mentioned earlier, as a byproduct, I see great share price appreciation. Now, if we come up here, we can see my portfolio value over time. It's fluctuated a little bit over the past few months. We can see in September of 24, I was at 206, 208 in October. And then in November of 24, I actually got up to 216,000. So we're a little bit lower since that time, but overall, we're trending in the right direction. But here's what's really cool. Even when your portfolio value is fluctuating, look at this. Your projected annual dividend income can grow every single month. So even if your portfolio goes down, because you reinvest dividends, because you buy stocks that grow dividends, and you contribute to your portfolio every single month, your projected annual dividend income is growing. And we can see as of right now, my expected yearly dividend income is sitting at $6,300. And that makes my average monthly dividend payments that I receive at $525.01. So regardless if I make any new purchases, I'm still reinvesting $525 right back into my portfolio. Now, if we keep moving forward, come down here and look at dividend income by industry, we can see real estate generates about 13% of my dividend income. We have consumer defensive, 8.2%, technology, about 6%, and financial services, 5.8% of my dividend portfolio. Now, if we come down here and look at my dividend yield on cost, what is dividend yield on cost? Well, it's telling you how much you're receiving in dividends compared to how much you paid for the stock. So for example, this is the one I always like to show, Broadcom, AVGO. My yield on cost is about 4.18%. But if we jump over to Seeking Alpha, let's look at what the starting dividend yield is. We can see for Broadcom, the starting dividend yield is sitting at 1.07%. So my yield on cost is so much higher because one, I bought in at a good valuation when the starting dividend yield was higher, but two, this company has grown dividends at a tremendous rate over the past decade, increasing my yield on cost. That's a good example of the power of dividend growth. And then finally, if we go ahead and zoom out just a little bit, we can see exactly how much dividend income each individual position is paying me. Now, obviously, SCHD is the big one at $3,433 every year, but we have some other big payers like Vici, $480 a year, Realty Income, $335, and Altria, $387. And other than that, fairly well diversified. So what I want to do now is jump over to my dividend calendars, but first I want to say thank you to Seeking Alpha for sponsoring this video. Seeking Alpha is an investment research platform that I've been using for years now, and it provides tons of very useful tools, and I'm going to point out a couple of them here. Now, obviously, we're looking at the home page, and I've showed a lot of the other features already, but here's something that's really cool. The earnings tab, we can see how they performed in the latest quarter's earnings. We can see upcoming quarter's earnings and the earnings per share revisions from analysts. So we can see analysts right now are bullish on Broadcom. We can see earnings estimates. What are companies projected to earn in the coming years? And then, of course, they have a dividend tab. We can see dividend metrics like dividend yield, dividend growth metrics, dividend safety, and of course, dividend history. And we can see a history of dividend growth with Broadcom. But one of the really cool features is, yes, I love to look at the charting, but I also love to compare how the peers' fundamentals look compared to the stock I'm looking at. And Seeking Alpha makes that very easy. We can see it charted out right here. We can see ratings. If we scroll down even further, we can see how they're trading, total returns, but then also look at fundamental metrics from these companies and how they compare up against each other. And of course, you have access to all three financial statements. So if you're interested in Seeking Alpha, you can check them out at the link in the description. Now, if we move forward and look at my dividend calendar, we can see every single stock that I own in my portfolio, how much they paid in dividends over the duration of my holding period, and how much I made in dividends every single month. But most importantly, we can also see how those dividend payments have grown. And Realty Income is always the easiest example of this because they pay dividends on a monthly basis. So look at my dividend payments from Realty Income over the years. In January of 22, it was $5.83. But because I reinvest dividends, they grow their dividend payments over time, and I contribute new capital occasionally, we can see the dividend payments from realty income are constantly increasing every single month. In this most recent month, it was $28. Now let's go ahead and see what stocks pay me dividends in the month of January. To start off, we can see we had a big dividend payment from Altria Group, stock ticker MO, $96.82. Realty Income, like I just said, $28. Vici Properties, one of my favorite real estate investment trusts, $120.87. JP Morgan, $13.24. JEPI, a stock that's probably on the chopping block to be honest. I'm not sure if it aligns with my long-term goals, $10.43, and then Cisco, a very small dividend payment at $1.70. Now, if we go ahead and jump over to my daily dividend calendar, obviously 2025 just started, so most of this isn't going to be filled out yet. But basically, we can see each day how much I was paid in dividends. So, for example, the most recent month, the 9th and the 10th were pretty solid dividend days. But here's what I really like to point out. Scroll all the way down and look at when I started tracking this in 2022. I received about $1,289 in dividends. Not bad, but if we scroll up, we can see the next year, it was $3,474. And last year, nearly $6,000. So this snowball is really starting to roll. I mean, that's enough to easily cover 1 to 2 months of living expenses, which is important to keep in mind because the long-term goal is to one day live off dividend income. So 2025 is shaping up to be a huge year for my dividend portfolio. But now we need to answer the huge question: how far am I from being able to achieve my goal of one day living off dividend income? And to answer that, let's go ahead and jump over to my dividend portfolio projection tab. All we're doing is we're inputting some variables here and then projecting my portfolio out 30 years into the future to see what the results will be. Now what we can see is all I've done is plugged in my starting portfolio size, assuming a price growth rate of 7% and dividend growth rate of about 7%, starting yield of around 3.5%, and assuming monthly contributions. Now there's more we have to take into account than just that. We also have to remember cost of living increases over time due to inflation. And while inflation has obviously been quite high over the past few years, the historical average is around 2%. Obviously we could bump this up to look at different scenarios, but in this case, let's assume my monthly cost of living is $4,000. In just 30 years, assuming that inflation rate, it's going to be about $7,245. And this is why dividend growth is so important. Your dividend payments can't remain stagnant, or eventually your cost of living will pass your dividend payments. But let's go ahead and jump over to the analysis. Now, what we can see from this chart, this red line, where it passes the black line, is a point at which I could live off dividends forever. So let's see how far away I am from that being able to happen. If we go ahead and zoom in, let's start scrolling down. We can see after 5 years, looks like monthly dividends will be about $1,765, which is amazing, but it's still not at my monthly cost of living. If we start to scroll down even more, we can see in about 10 years, $3,338 in dividend income. Still not quite there. But if we keep scrolling down, we can see right here, this is the point at which we could live off dividends forever in about 14 years. And it is worth pointing out at that point, my monthly cost of living, assuming that inflation rate, would be closer to $5,300. But even then, my monthly dividends would be about $5,306, meaning I could live off dividends forever. And yes, at that point, I could actually stop reinvesting dividends as long as my dividend growth rate is above the rate of inflation. That's something a lot of people have questions about. And in fact, if we look at this at an even higher level, jumping back over to my investment dashboard and look at my future portfolio outlook, assuming we're not reinvesting dividends in 5 years, I could be making about $16,573 in dividend income, but if I do reinvest dividends, it jumps up to above $19,000. Now again, if I don't reinvest dividends in 15 years, about $47,650. If I do reinvest dividends, it goes all the way up to $71,663. But here's what's crazy. If I don't reinvest dividends in 30 years, I could generate about $158,855. If I do reinvest dividends, it goes all the way up to $371,500. And that goes to show you the power of reinvesting those dividend payments and why it's so important. So there you go. That's how much dividend income I made in the month of January from a $211,000 account. Like always, if you'd like to download this spreadsheet or get access to any of my other spreadsheets and access to the ticker data add-on in Google Sheets that allows you to automatically import stock financials straight into your spreadsheet, then you can head over to tickerdata.com at the link in the description. So with all that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.